So Rocky's going to take over on the markets and the economy.
So let's go on. A little bit of a change of direction here, finishing up with COVID. Let's see what's going on in the economy. I'm going to start with a slide that talks about what's really changed. Big changes due to the pandemic, but it's really just an acceleration of a longer term trend. And what we're talking about is e-commerce. If you look going back to 1999, online shopping and things like that, e-commerce have really been growing year by year. But look what happened in 2020 with the right side of the chart and the straight vertical line practically due to COVID and being shut down, how much buying things online, managing your businesses and accounts through e-commerce has changed the landscape for sales in the United States. It's a huge jump. And if you notice the dotted line, that we are planning on seeing that trend continue from that high point, not actually dropping off. So that's pretty interesting. And believe me, the money managers are looking at this data and looking at how that plays into your portfolio structure. Consumer spending has slowed recently due to the local restrictions that are being put in place, but we believe it's going to be short term. As you can see on the right side of this chart, there is a little bit of a downward trend going on right now. We expect that to go through the end of the year. Hopefully the Christmas season can pick up that line a little bit, but we believe, again, this is only going to be in the shorter term, and we will be off and running next year. And you can see that actually in this, where we're showing more of from a consumer consumption standpoint, that the consumer spending will continue to be on an upward trajectory through the balance of next year. So that is good. One of the things that may be hindering this a little bit is the lack of stimulus right now. And that's something that we talked about up front might be needed to keep the economy moving as there's restrictions put in place. But with the continued progress with the vaccine, we expect activity as that vaccine becomes available to continue to pick up and grow. When we're looking at income and savings, what's going on here, basically, you can see where the CARES Act in the chart back in the beginning of April, going into the beginning of the summer, when the stimulus checks and enhanced unemployment checks went out, that even though the income was dropping, there was money in the system, and that's what was reflected in those previous charts. Again, we're saying more stimulus is needed. So the CARES Act ends at the end of this year, and there will be need for some kind of extension for enhanced unemployment benefits, slowing the eviction process and loan forbearance for people that are unable to make their mortgage payments and stuff like that. Those kinds of programs have to be continued. Otherwise, we're going to continue to see a decline in income and savings. But we believe that that long term is going to be worked out, and we're going to see an improvement in 2021. This is interesting to see because one of the things we've talked about from a market standpoint is how that we're underweighting Europe. So this is a good way to kind of see the U.S. on the left side of the graph, Europe in the middle, and China on the right. What's happened is with the second wave of COVID, they've been shutting down significantly. And so due to their widespread restrictions, you see that their recovery is actually waning. It's going in the wrong direction. The United States has been more resilient, and based off of that, we see more opportunity for the stock market in the US than in Europe. And also China, when you look at them on the right side, it's slow, but it's pretty steady, slow growth. We don't see any decline over there. And to continue that discussion farther, let's look at exactly how performance has taken place in the markets over the last 5 years. The United States has been up about 12%. Europe, on the other hand, only about 2%. Emerging markets, which is, this is just the Asian emerging markets, about 10%. But when you look at emerging markets as a whole, it's excluding Asia, everything outside of Asia is actually down. They're going in the wrong direction. So when we talk about portfolios and passive versus active allocations and strategies, this is why you need to be tactical during this time. You just don't want to hold an index. You want to know what the trends are. You want to be looking at where the growth opportunities are at and avoiding or minimizing your exposure to some of these markets that are not performing. Looking at the stock market, comparing this year to what we're expecting for next year, you can basically again see the United States on the left half. The black bars represent where we believe 2020 is going to end up. And the blue bars represent what we're forecasting for 2021 in corporate profits and earnings for next year. So going back to the left side of the chart here, the United States, we're expecting about an 8% drawdown in revenues and profits this year due to COVID. However, next year, the forecast is about a 16% growth in profits and revenues, which will bode well for the stock market. If you look at developed international, which is the European economy, down about 30% this year, we're looking at about a 20% growth. And you might say, wow, that 20%, that looks pretty good. However, when you go down 30% and you can only come back 20%, what is that actually saying? They're not even getting back to their end of 2019 levels for profits and earnings for the corporations in Europe. So that, even though it's a good sign that it's going to be positive, they're not expected to get back to even next year. Again, another reason it makes sense to be tactical and looking at what trends and where we need to be invested for the future. And as that changes, we can adjust the portfolios. Dan?
Yeah, Rocky, it's interesting when you look at the U.S. and the fact that they're projecting a -8. If everybody goes back to the beginning of this whole crisis, they were literally expecting double digits from a negative side for the U.S. alone. So it just shows you the power behind the U.S. economy prior to what hit with COVID. So I'm really, really pleased with the numbers that I'm seeing right now comparatively.
Yep. And when we add Asia into the mix, they are going to be about the same. They really didn't take the big hit. They had the most V recovery, the shortest recovery. The United States was not far behind that recovery, but they're projected to maintain basically the type of growth that they're going to experience this year. So again, you can see the United States from a growth standpoint has about the most to gain, and that's where we are focusing our portfolios right now moving forward.